Hey guys, this is Andrew Lee, your health insurance guy, and today's topic is going to be a fun one. Today is about who should qualify for Obamacare, who needs Obamacare. So, the first one that I'm going to go over is called the freelancer's dilemma. So, that means you're either a creative, meaning you're a photographer, you're a dancer, you're a musician, any of those that are any profession that's 1099, or if you own your own LLC and you are owner operator, then of course that's going to be the net income that you present to qualify for a subsidy on Obamacare. So let's say that you're a small business that needs to provide insurance to your employees just out of good faith. Obviously, you don't necessarily have to get them employer coverage if it's that small of a business, but if you're that small of a business, then each person can qualify for their own respective subsidies. Everyone that's applying, they're going to have a range of medical differences, right? They're going to have medical situations that are completely different. So you never know. So it's not, if you're already providing your employees coverage out of good faith, you might as well look into seeing if they're eligible for subsidies too, and then work something out. Number three, the single mother's burden. Now, this also can hit home for a lot of people too. If you're a single mother and you are to having to get health insurance for your kids and yourself as well after, let's say, a divorce, or whatever the situation is, you're not working, so you're not offered employer coverage, then you should qualify for Cover California. At the very least, Cover California, if not Medi-Cal. So if you're eligible for Cover California, great. Here's the thing. You have multiple dependents if you're a single mom, or let's say you only have one. You're sharing the income that you bring in with your children. So that should give you a lot of subsidies, making your policy maybe even close to $0. So if you're a single mom in that situation, highly, highly, highly recommend looking into Obamacare. Now, another one that I would want to go over, this is sort of, I mean, not rare, but it's not every day. It's the student's uncertainty, right? Let's say if you're enrolled into a university, and once you get to that university, you find out that the premiums for the campus clinic or going to the local campus hospital is 200, 300 more bucks than what it could be with Obamacare. Because if you're working part-time, let's say, for example, and you're receiving some kind of income and qualify for Cover California, heck, look, you can probably get a pretty dang good plan for $0 compared to 200, 300 some odd dollars offered by your university. Now, number five is the retiree, right? The concern of a retiree. Now, people that are retired that are my clients fall under two categories, right? They're either going to keep working, or they're going to keep working, and let's say they keep working and they turn 63 and they say, actually, I'm not going to work anymore. I'm over this. I am retiring. At that point, you're too young for Medicare since you're not 65 yet, but you would still need some kind of coverage. If that is the case, then you would want to look into Cover California. Again, it's based off of your income, household size, age, zip code. So this may vary for this type of client. And number six, we have the family's financial worries, right? So medical bills are the number one killer of all income in the US. I repeat, it's the number one reason why people go bankrupt in the United States. So it's a pretty fair worry to have concerns over medical bills, right? So you would need some kind of plan that has an out-of-pocket maximum, that has a minimum essential coverage, so that, God forbid, in the case something worse to happen to you and your family, you're not paying that much out of your pocket. Of course, you're going to want to discuss out of pocket maximums with me, things like that. We can definitely go over. Of course, there's hospitalization, supplements, ancillaries that can definitely help with your coverage and boost more coverage for you in specific situations like hospitalization. But for the most part, it's good to know that you and your family are safe, and that if you need something, that you have it instead of having to need it whenever something happens. Number 7, I want to say, is going to be the entrepreneur's risk. Now, these are the people that are making enough money to think that they can shoulder a full medical expense. Now, you're taking that gamble, right? Now, if you're an entrepreneur and let's say you're healthy, you're in your late 20s, early 30s, maybe call it early 40s, and you've never had any incident with cancer, heart attack, or stroke, or broken bones, surgeries, let alone hate taking aspirin. If you're that kind of person, you very much run the risk of, God forbid, something happening. For example, this specific scenario, I've had clients hiking in a pretty remote part of Idaho that they like going to, and they were in a scenario where they could not get out of where they were, and they were injured, so they needed medevac to get out. Now, these are healthy people. These are people that love adventure, that needed assistance. So you never know if that's going to be you. So again, if you're the entrepreneur that feels like you can shoulder you can take on all of the medical expenses, hey, good on you. But if you can take on all those medical expenses, you can definitely pay, X amount of money for a premium per month, so you have an out-of-pocket maximum. Number 8, the young adult's uncertainty. It's going to go back to what the entrepreneur's uncertainty is, right? If you're young, hey, it is what it is. I barely, get injured. I don't even want to go to the doctor. I'm scared of needles. I just do not like going to the doctor whatsoever. I've had terrible experiences. Mommy, I do not like needles, right? You've heard it all. I just don't like the way that doctor does certain procedures, whatever the case is. Now, I understand that, a young adult is going to go through these things, especially if they're, 19. But, if you're 19, you can start applying for coverage. It's not a bad idea to let your children know that, hey, look, yes, you probably won't use it. And yes, you probably have, no situations that might happen in the future, but you never know. You never know. And these plans could be $0. So let's check this for you. And then if it's $0, heck, you have coverage. And if you never have to use it, great. You never have to use it. But at the very least, you have protection. Number 9 is going to be the immigrant struggle, right? So if you are on a green card, let's say, or any visa, right? J1, anything that had I-94, employment visa, anything like that, you're eligible as long as you have a social security number for Covered California. Now, if you're in a situation where you're going back to your native country or whatever the case is, it is what it is. You're going to have to go every single time. If you're an immigrant and you want, standardized care here available for you, then you definitely are eligible to enroll. A lot of immigrants don't know really the ins and outs and the rules. It's not really their job to know this. It's not really something that's a passionate subject that people should know, but it is available for immigrants, just to let everybody know. So that wraps it up. Those are 9 key points as to who should apply for Obamacare and why they should. I've given you guys many reasons, and of course, there are going to be a lot of questions about, such reasons. So feel free to give me a call, 323-844-8471. Again, that's 323-844-8471. Or you can email us over at info@Health Mutual Network. Thanks for watching. Please like and subscribe so I can put out more content like this. I really love doing this and would really love your support as well too. So I'll see you at the next video. Thanks.